let's face it, in 2013 we have seen several large cases going into restructuring, and of course, namely, EVG, the real estate company, being one of the big cases, as kind of an indicator, that even big companies were going through a restructuring. While, at beginning of 2014, we clearly saw that given the very positive environment in Germany, it was first thing, less restructurings, obviously, and clearly tending more to the small and medium-sized companies. What interesting enough happened now over the summer, in a way, we do clearly see indicators that not only political crisis like Russia impacting the machinery companies in Germany, probably more than expected by many market players, and some early indicators in terms of metal industries being a clearly early indicator of where economies might head towards over the next couple of weeks and months. We see clear indications of restructurings coming back, and therefore we fully expect to be busy the second half of 2014. So it's not going to get boring for us.
Yeah, certainly. I mean, as you said, the AQR is not the triggering event. It's just another mosaic in the regulatory environment. So I guess in terms of sectors, what we've seen was clearly the shipping. That's an evergreen, and that will continue certainly for some more time. Other sectors was the solar, which is now going over to other renewables. So that is clearly one. One that has come up last year was steel trading, all that. So that is certainly something that impacted us in Germany. Others that we see is recycling, given the regulatory change that are happening there. So this is obviously something. And then given Germany's strong automotive footprint, obviously that is something where always one or the other shakeout is. Apart from that, I think what we will also see in Germany and where focus will go is more to the retail bonds that were issued in 09, 010 and 2011. So that certainly is where a focus will be. And apart from that, probably also in the textile and fashion industry, which is then obviously correlated to a certain extent with the retail bonds.
It is like there has not been that much change over the years, that we have, of course, a lot of liquidity, a lot of funds, especially looking into Germany being one of the countries with a broad base of still producing businesses. However, out of the restructuring arena itself, we have not seen that many cases. Obviously, we see the debt traders, and then also based on the debt trade, trying to be a more active investor, especially in the private equity portfolio companies arena. But there have not been that many cases. No? Everybody at the moment, of course, is talking about AQR and the impact of AQR. What does this mean for the lenders, for the German banks? Do they have to sell off a lot of loans? We would not expect that. No? Let's face it, the German lenders, they know what they do. They're very professional with their portfolios. And over time, there might be a little bit more pressure with the EZB oversight pushing them a little bit, but we would not expect to come a major sell-off phase coming out of the results of the AQR. However, nevertheless, what we do expect is clearly that going forward, the way the German lenders might view their lending portfolio and might view new cases, that there is certainly going to be it's going to be harder for mid-sized German companies to get funding from their lenders, no? And it's going to get more expensive too, and it's going to get more intense, just given that the EZB is clearly raising the administrational hurdles and the lending oversight, not only at the setting up the lending, but also during the time of lending. That we clearly see that that's going to be more tricky for mid-sized companies, and based on this, we would fully expect going forward also that alternative lenders and alternative ways of funding a company are going to increase, just like in the trend we have seen over the last couple of years as well.
Well, it depends which kind of bonds you look into, whether it's high yield bonds. Clearly, in Germany, we have a new law to that, the Schuldverschreibungsgesetz. However, so far that is rather untested, given that a lot of high yield issuance that relates to that specific law has only happened. So that is some way out. On older deals, bond restructurings have always been tricky, and especially when it comes to the retail bond side, obviously it's tricky just given the number of cases we saw. We so far haven't seen a case on the retail bond side that was able to really refi and avoid an insolvency. Difficult to say what the reason is, whether it's the underlying asset, or I'd say mostly it's also the sheer factor of that when such a bond is issued, it goes out to retail clients. So in a first step, that goes out to people that usually are not regular participants in the capital markets. It goes out to private persons. So they look at it more like as an investment where they can get a decent return nowadays, but not as something that trouble could come from. And this is what is difficult. So if you sell such a bond in the first step to 100, 140 retail clients, when you want to do something with that bond, it's obviously difficult to identify all these people and then explain to them why and what you need to do, and then also simply get all of them into a room and make decisions. And that's why a lot of these cases probably headed also to insolvency.
It's getting more difficult for them, there's no doubt about that, and funding meetings around it and negotiations around it is going to get clearly more time intensive. And the German mid-sized companies especially, they need to be much better prepared to go through processes like this. Secondly, the CFOs are certainly looking at different sources of funding. And we have seen it too over the last couple of years with the bonds, even the mid-sized bonds now being at least they were available. At the moment we are looking at this market segment and nobody knows exactly where it's going to head towards. But still also on the leasing side and the factoring side, all these alternative providers of funds for companies are getting more traction certainly, and they're going to be more important. And CFOs of companies will certainly view them more as an alternative to what we have seen maybe in the past, only looking into the banks on the bank side. Yeah.
Well, I think that shift has gone on for a while. When you look at the German multinationals, they clearly are able to access capital markets directly, and they've been able to do so for a number of years. So they have the clear access. Where it's probably more difficult will be in the mid and small cap space. There, obviously, the retail bond that is an invention so far hasn't gone quite the way that people expected it, but there is financial innovation, which is good. Apart from that, we've seen a number of debt funds in all kinds of shapes and forms, and we welcome that as a clear addition to the banks. However, at this point in time, I think they are simply on the sidelines, given that Germany still is the safe haven of the Eurozone. The German banking system itself is still strong with its three pillars: the genossenschaftliche Sektor, the savings banks, and then the private banks. Plus, you obviously also have a lot of banks that decided to come to Germany and open up franchises. So the problem that we have here is we have more bank branches than bakery shops. And that obviously is also something that will ensure that there is liquidity, but only through the regulatory side. I'd say these days, these newer investors will then get access to certain situations. These days they concentrate more on hairy, difficult assets where the normal standardized bank loan isn't a fit. So this is where they come in, and over time that may gradually change.